Hello, and welcome to Electrifying Growth, a podcast brought to you by Edison Partners. I'm Chris Sugden, managing partner here at Edison and your host. There are moments in a person or company's journey that are undeniably electric. The spark or sparks, if you will, that propel you or your company to new heights. With Electrifying Growth, we're here to have in-depth, real conversations with great leaders who have been there and done it before. Edison has been investing in high-growth technology companies for more than 35 years, and I have been here at Edison doing this investing piece for more than 20 years. We've led over 225 investments. We understand that it takes great leaders and visionaries to build market leaders. We are your support system, a CEO and management's entourage, if you will. Let's introduce this episode's guest. Welcome to another episode of Electrifying Growth. I'm your host, Chris Sugden. Today, I'm truly honored to be joined by a guest who has navigated the highest levels of finance, entrepreneurship, and government service, David F. Eisner. I've had the great pleasure of working with David on a couple of boards, as well as staying close to him as a mentor to me and many of our CEOs at Edison Partners. As a Wall Street executive, high-growth CEO, and entrepreneur, David's made his mark in the financial world, founding and leading companies that have delivered extraordinary returns. As you'll hear, we're talking double-digit returns, 20x, in fact, you'll hear in today's episode. His impact goes beyond the private sector. From 2018 to 2021, David served as the Assistant Secretary for Management at the U.S. Department of Treasury. Really think of it as the COO of the Treasury Department, where he was a key player in leading the department's operations, strategy, and budget. He directly influenced the implementation of the CARES Act, which some of you know during the early stages of the COVID pandemic kept the country from real crisis economically. Throughout his career, David has been recognized as one of the top fintech innovators globally. In fact, really one of the innovators around financial markets, has been a key figure in the global corporate governance movement. In today's conversation, really excited to hear and share David's journey from startup to scale up to now serving as director and his time in the government. David Eisner, great to see you today. Welcome to Electrifying Growth.
Thank you, Chris. It's great to be with you.
We've had a few battle scars and been through the wars and come out the other side and in pretty good shape on a couple of things. But I'm really pleased to have you here today and joining us because I think your experience as big, I'll say Wall Street banker to startup entrepreneur to now even involved in something bigger with more banks, but also in between a segue to the US government is quite a story. And so there's a man in full here that I'd love to get behind. But I'd like to start with, if you could, how you went from Wall Street banker at Jefferies to entrepreneur and themarkets.com. Fill us in on, it's not always a usual path. A lot of bankers stay bankers.
Well, even before I was a banker, I was a lawyer.
Fair enough.
A lot of lawyers stay lawyers too. So I spent 4 years at one of the big Wall Street investment banks, Fried Frank, during the 1980s, and really worked on some of the biggest M&A deals in those years and worked with a lot of bankers. And I'd been an accounting major when I had been in college, and I could actually have a little bit of an understanding about why two companies were coming together. And a bunch of bankers would say to me, you really need to become a banker. I thought being a banker was really cool because I thought being a banker meant being a client. I just didn't realize it was only one step up the food chain. So after a few years of being a lawyer, I had an opportunity to go to Wall Street and become a banker. And I spent about 13 years at Jefferies, half of that time as a banker. And then about halfway through those 13 years, Jefferies had really begun to evolve. Jefferies, for the first 20 years, was a single trick pony. It was third market, secondary trading. And in the mid 80s, the CEO really began to diversify the business. So by 1992, when I'd been at Jefferies for about 5 years, the firm had 7 different businesses, including one of the first electronic trading platforms. And the CEO, Frank Baxter, who was my mentor, still my very close friend who I really adore, is the board said to him, Frank, you got to diversify management. He was one guy, as he used to say, managing by fire hose. Where's the fire today? I need to put it out. So he tapped me to come out of banking and become his chief of staff. And I often say, if I'd been a better banker, he probably wouldn't have taken me out of production. And then within about a year, I had third of Jefferies revenue reporting into me. And Jefferies market cap grew from about 100 million to 2 billion in the 7 years that I was in senior management. I'd kind of done everything I'd wanted to do. Jefferies was an entrepreneurial place. I mean, there was a lot of eat what you could kill.
Well, let's double click on that. 100 million to a couple billion.
Right. And that was a great period of time for the brokerage business in general. We did some things right. We had some wind at our back. but I'd always wanted to do something entrepreneurial. And so I left Jefferies and started my first company. I didn't know how to start a company, so I did it with this group in Pasadena, California called Idealab. You probably remember those guys. And it was a great idea and ahead of its time. And so I often say that when a great idea is ahead of its time, that's a synonym for a bad idea. So, the one thing I would say about that company is in March of 2000, when Kleiner Perkins invested in Google at $100 million valuation, they were the first investor in my company. And we kind of laughed at who would pay $100 million for a search engine. But at least as far as that company is concerned, the greatest accomplishment was that at a point in time, we both had a $100 million valuation.
So let's talk about the markets a little bit. What was the entrepreneurial bug? Where did it come from? What made you want to start something? What made you think you could start something? What was that?
I had just admired entrepreneurs, and thankfully I had a little bit of financial independence at the time. And, we'd done so much at Jefferies. I mean, there was a lot more to do, and Jefferies has certainly grown since 1998, done incredible things. But it just seemed like if I was ever going to do it at around 40 years old, that was kind of the time to do it.
Your admiration for entrepreneurs comes through when I've worked with you on a board or two, and we'll get to that in a minute, but I think that says a lot. The idea that you saw people like that as people that change the world, I guess I'd say. And that, like I said, that comes through. Why don't you talk a bit about what themarkets.com, what was the aha? What did it do? Talk a bit about it.
The background was in 2000, when the company was founded, you basically had the internet evolving into a tool that people were using, more and more in their personal lives. And many businesses had caught up. Wall Street was still a little bit far behind in the use of the new technology. And so in the research space in particular, but even in the client management space in general, every firm kind of was living by the words, we got to be connected to our clients. So client connectivity was the big buzzword, right? So every firm started building the best websites they could possibly build. So Merrill Lynch built this, so Goldman had to build this, and Morgan Stanley then had to build that. And it became like an arms race. And for an individual investor who had a single account at Morgan Stanley or Merrill Lynch, it worked great. But firms thought that if they built the best website, that their institutional clients would want to come to their website. Well, institutional clients who had 30 or 40 or 60 relationships weren't going to go to 60 websites in order to figure out, what the street was thinking about Apple. And so it's just really the simplest idea, the simplest application of the internet was take vast amounts of information, analysts, research reports, earnings models, estimates, etc., and put it all on one platform that would be easily searched, so that when a institutional investor wanted to access information about Apple, he put in AAPL, the whole thing came up, everything he wanted to know was there. And in some cases, we connected back to the brokers' firms for their analyst earnings models or certain types of data, so that they got some of that connectivity, but they certainly got data on who was reading their research. And we were very careful, because there was also a time when brokers became very concerned about who was reading their research. Why are we giving away this intellectual property? So we scrupulously took care of entitlements for them, so that not just XYZ firm could look at it, but who at XYZ could see what kind of research. So it was a big service to the brokers, and it was a big service to the institutional investor community.
Love it. Give me the punchline. I think it was a really good outcome.
Yeah, so we somewhat had to swim a little bit upstream, because we got live in 2001 or early 2002. And then the whole blow up on Wall Street research happened, and buy side would be, well, I don't even read Wall Street research. Like, come on, guys. I don't know how much you value it, but you can't develop your own investment thesis without knowing what Wall Street thinks. So we had to swim a bit uphill for a couple of years. Wall Street firms were laying off people. We were a consortium of brokers. So guys on our board would think, well, how come your people are making more money than some of us are making? And I said, it's the old story about Babe Ruth was once told that he made more money the previous year than Herbert Hoover. And Babe Ruth turned and said, well, I had a better year. So our business was growing 100% and then 50%, and Wall Street was struggling in those years. But ultimately, we kept the support of some really great firms, and we ultimately had an exit, sold the company to Standard & Poor's, who owned Capital IQ, and the Wall Street reported pretty accurately at a $300 million valuation, which was real money in 2010. And the initial investors made about 20x on their investment.
Phenomenal. 20Xer is definitely right up there with any great venture outcome, and congrats. And I know you actually, I think about coaching trees, in sports, there's these coaching family trees, right? The assistant coach becomes a head coach. You actually spawned a really interesting, the markets.com management family tree, if you will, that have gone on to do great things. Talk about that.
Yeah. Well, look, one of the things that I found out really early on, learned a lot of this from my mentor, Frank Baxter, was people are the most important asset. And at Jefferies and then at the markets.com, we live that. So I would say at least five, maybe 10, if I think of it, of my senior management team have gone on to be CEOs of successful companies with exits and with creating a lot of wealth for investors and employees. We had a spinoff from the markets.com, which was called Visible Alpha. And Visible Alpha just traded. It's not been reported. I've heard it's somewhere between $300 and $500 million, which was really a project that we spawned in the markets.com that we didn't sell with the rest of the company. So nothing makes me happier than creating wealth for employees. And we did it at Jefferies. We actually forced our biggest producers, which wasn't popular in 1993 and 1994, to take a large amount of equity as part of their bonuses. And the stock did a 20x. So you can go from being a devil to a hero in a couple of years. And then doing the same at the markets.com, multiple, people who became millionaires as a result, and many more had security for their families. And that to me is really the most exhilarating.
We in a prior episode of Electrifying Growth, Amy Katamatsu, who you helped bring into Portfolio Company, we'll talk about now in a minute, where we actually met. She doesn't only validate that. So for our listeners, if you hadn't listened to Amy's cast with me here, highly encouraged. But David's humanity, but also his followership is tremendous. And I know from a couple of the people you mentioned, she has this special place, so to speak, not, mentor, care, all the things you hope that you can get through a boss, but also now it's what, a 25-year relationship, probably something like that, right?
That's right. She was just out of business school, and I was creating this stealth project at Idealab, and she put herself in front of me, said, I don't know what you're doing, but you're working harder than anybody else. It looks more intense. I want to do it with you. And so that became the beginning of a 25-year relationship. One of my sales points to get her to come and work with me was one of my proudest achievements at Jefferies, but 100 guys became millionaires as a result of the stock. And I said, so that's my goal for you. Well, that first company, which was called iExchange, it didn't accomplish what I promised.
It worked out the way the markets did.
Right. But we started the markets, and Amy called me a few months into that and said, Bobby and I are thinking of moving back to New York. Is any place for me? And I would create a place for Amy. She's so fantastic. And so Amy, I think, was the fourth employee at the markets.com. And also
amazing. So you and I met, it was quite fortunate, actually, a founder who, one of Edison's, you actually talked about people. So people first, getting the right people around the board table, getting the right people on the management team before playbooks is one of our really big mantras at Edison. And you obviously lived it as you just described it, or we just talked about it. But I think what was cool was the founder said, hey, can you come join this board? It was a little company called ComplySci, and ComplySci is now Comply for our listening audience. It's actually been recapped twice and had 2 successful outcomes. We'll have a third as well. Amy actually joined that company. But David, you walked in as an independent board member, and without getting into too much of the details, if you will, your hands all of a sudden were on something. But let's just talk about kind of directorship and kind of as you walk into all the big company stuff, growing a company like the markets. Now you enter a little company as a independent director. And I know you've done a lot of directorships, but how do you approach a director seat of a small independent company that's independent as in we're a minority owner, not a majority owner? How do you approach that? You're doing it again, I know, but just talk to the audience about the value of how you come into those things.
So again, the first screen is the people. So do I like the CEO? After a couple of conversations, do I feel like this is somebody I respect, who I think
Some rapport.
we
Yeah.
can grow a company around? And then who are the other directors? That is, am I going to enjoy going to a monthly or quarterly board meeting and interacting with people who are going to be as excited as I want to be about the company and intellectually engaged? And so those are really my first two screens. This is one of the things I found about angel investing very, very frustrating, is you can never do enough due diligence for the size investment that most angels are making. So you can't do that really even with a company that you're going to become a board member of. So, I mean, you can, but it would be a lot of work to do that. So basically you rely on who the investors are, particularly the most recent investor, and talk to them and see if their investment thesis makes sense to me. And in the cases that of the boards I've joined, that it has, and that's been successful.
Amen. Amen. When you think about coaching the CEO outside the boardroom, there's sort of the boardroom where management, but especially the CEO, feels like they're being evaluated and they're under the gun. We try, as much as we try to say, we're here to help, there's always that feeling. But I know you do a good job outside the boardroom having conversations, and there's sort of the mentor, coach, board hats. You're kind of wearing all of those. How do you put that CEO at ease to know you're there to help them, not sort of just always evaluating them?
Yeah. So the first thing, which after I sold themarkets.com, I had decided I never wanted to be a CEO again. So the first thing I let a CEO know is I have no interest in his or her job. Second, the stewardship role has to be balanced with what I'll call the advocate role. As much as possible, I like to be or want to be an advocate for the CEO. I want the CEO to succeed. That's the second message. Nothing more than I want you to succeed. And I'm here to help you as much as possible. And in most cases, I meet with the CEO every couple of weeks, at least, sometimes every week. I review board decks. I review presentations as often as I can, and as often as I'm given that, because I can help avoid a stumble. And if I'm sold on it, I'm going to help advocate for it.
You've seen the movie a few times, right?
Yeah, I've seen the movie a few times. I know what some of the triggers are. And after really 30 plus years, there aren't that many novel issues that a CEO faces. It's a little
different business model, different industry maybe, but.
And so I can at least impart the mistakes I've made and the lessons I've learned. And so that's a big part of it too.
Hopefully this doesn't come across patronizing, but your humility has always stuck out to me from almost the day I met you. And the shifting gears to sort of your chance to kind of give back, I guess I'll say that way, when you went to work for the Treasury Department. And I know the story, at least I'm hoping I'll share a little bit. I'm not sure if I'm sharing too much, but I think the first ask you sort of said, I don't think so. And then to the extent you want to say who it was and all that stuff, I'll let you do that, because I didn't sort of necessarily pre-clear all that. But I guess the point is the chance to go inside the bowels of the government and the Treasury Department is pretty unique, and you did it. We're out of service is how so to the extent you want to explain a little bit more about the role and who you work for, et cetera, please go. But I also would love to have you talk about how hard the government makes to go help.
Well, I'm going to give you some really fast history, because if your memory of my interest is not exactly right. Back in college, I went to American University. I worked for a senator by the name of Henry Jackson. It was a giant of the Senate in the 60s and 70s. And I was really inspired to public service. And so I went off to law school thinking I was going to come back to Washington, D.C. and work at the Treasury Department or work at the FTC or the SEC or something. And it's hard. It was especially hard in those days to figure out how to even get into government.
Find a way in.
I did decently well in law school, but I couldn't figure out how to get into the government. So I won't say I took the easiest path, but I took a different path, which was I went to Wall Street at a big Wall Street firm and thought, okay, maybe government will be somewhere down the road. And my career went 30 years. I honestly can't think what I would have done differently. I really felt like I'd done everything I pretty much wanted to do commercially, and thought that the idea of working in government, really the idea of giving back and doing service, which I tried to do a lot of communal service over my careers, tried to spend 10 or 20% of my time doing that because of the idea of being able to touch people's lives and be able to improve people's lives and improve causes that were important to me was really kind of part of my DNA. So in 2000, we started the markets.com, as we talked about I didn't say that it was with 4 large investment banks. And one of them was Goldman Sachs. And there was a guy at Goldman Sachs with a funny name, and his name was Mnuchin, and he was the CIO of Goldman at the time. And at the first board meeting, I didn't have somebody to go to beforehand to say, look at this deck. How does it look? And in the nicest way, Stephen Mnuchin pretty much eviscerated me, embarrassed me. Not that he tried to embarrass me. I was embarrassed at that first board meeting in front of all the other firms, because we had 10 firms involved. And I said, I'll never go to another board meeting without going to see Stephen Mnuchin first, because he could move the whole room. That became clear. And so we developed a bit of a relationship during that couple of years before he left Goldman, and stayed mildly in touch for the next 6 or 7 years. And then in 2017, he was appointed the Secretary of the Treasury. And well, I know you know this story. I was sitting in January or I guess it's maybe the first day of February in 2017, watching the Super Bowl with my 90-year-old father, who was a little cranky by 90. And in the third quarter, this is the game when the Patriots came back from a 24-point deficit in the second half to win. And in the middle of the third quarter, my phone started buzzing with text. I'm looking at it. It's text from Stephen Mnuchin. Do you have any interest in public service? Which, of course, I thought my life was going to be devoted to public service. My father, on the other hand, is, who the hell is texting you in the middle of this game? But it took several months before we came up with the right role, and all of the, still not super easy, even when the president appoints you to get all the way through. But I took that role, which was the chief operating officer of the Treasury, the assistant secretary role. And that was the best job that I ever had.
Well, I remember getting to come visit you and you gave me the little tour, but the sheer size and scope of the Treasury Department, not necessarily a typical business conversation, but just it's hard to comprehend, actually.
Well, I like to say that if you think about the 10 things that government has to do, 5 of them happen at the Treasury Department. Treasury collects 95% of the $5 billion a year, $5 trillion a year that the government collects in taxes. Treasury then raises between $7 and $10 trillion a year in Treasury bonds and Treasury bills to finance the part of the government that the taxes don't cover. Treasury pays all of the bills and all of the Social Security checks and Medicare checks and everything for the government. Can't run a government without, you can't pay your bills. Treasury prints our currency and is really the agency tasked with supporting the strength of our currency. And fifth, the thing that all of the first 4 kind of people might have a sense that the Treasury would do. The fourth is really in the national security area. The Treasury Department provides the most potent form of non-kinetic national security work through its sanctions and designations. So it's a very powerful weapon in the national security arsenal, and it's a big piece of the Treasury's work as well. So you take all those things together, you say, wow, this was the place to be. I'm very much, will always have a very soft and warm spot for the U.S. Treasury Department.
Yeah, I think one of the things that stuck out for me, and you don't have to elaborate unless you want to, but I really want to ask you a question about some of the op-eds you've written, and kind of we're in an election year, and boy, it's an interesting time to be alive. And I tell my kids they're living through history, right? Even the last couple of months has been unbelievable. But one thing that stuck out for me is you were highly impressed, I hope I don't get this part wrong, with the people who are kind of employees of the government. I think what you said was people are pretty dedicated to their jobs.
Yeah. You probably asked me what was my biggest surprise. And as kind of a small government political ideology, I had kind of a negative view on bureaucrats. And look, I still believe there are too many, but I have to say, at least at the Treasury, and then I would say the people I interacted with at other agencies, the career people, were really outstanding individuals, dedicated, patriotic, many of them veterans, loyal to the fact that they were public servants as well, and that they needed to be loyal to the agenda of the elected government. And I'll tell you, my relationship with many of them on January 20th, it changed. And that was as it should be. But that was my single biggest pleasant surprise in working in
Look,
government.
there's some comfort in all of us, whether you're on the right or left or in the middle, to know that the government, that is what's happening, even though there's a lot of politicking and you get lots of the extremes in social media and the press. It's actually somewhat comforting. When I remember you told me that, I was like, well, that gives me a little bit of hope.
Yeah, I think the Treasury was probably the most extreme example of that. I think as I went through the Treasury, the work is too important
for partisanship, so to speak.
Yeah.
So back to the election, you've written some interesting op-eds. The world is literally sometimes feels like it's on fire, from last year's October events to the assassination attempt on our president, or former president, I should say, the hot swap, as some have called it, for the nominee. I know we could do a whole hour, so I'm only going to give us a couple minutes but I do want your perspective, because I think it's one I respect. I think you've seen a lot. Yes, you have a point of view on politics, but I don't view you as highly partisan, frankly, and having known you a while. Where is the country?
Well, let's start with this. This current situation of our country is depressing. But I really wanted to start with something different, which was the arc. I really believe in the arc of history. And I think to be an entrepreneur, you have to be an optimist, right? That is
100%.
In kind of the way you look at life.
The sun's going to come up, the half full empty glass.
Right. So with all our problems, with the problems of our democracy, with the problems of our economy and immigration, everything, the problem of the split of the American people, the divisions, one of the other things that comes with a little bit of gray hair is some perspective, right? That is, now you live 60 plus years. You've seen markets that have gone crazy. And so when they go crazy, the fourth or fifth time that you've seen it, you tend to have a little bit more perspective. And I think governments kind of go the same way. We've had tumultuous times that have been short of a civil war, thank God. And so I have confidence in the system. And so long term, I'm still bullish on the United States of America with all of the problems that we have.
The interesting poll, because I'm with you, and being in my 50s, I do think I've got certainly more perspective than I had in my 20s or 30s. Social media doesn't help. Lots of the press doesn't help. Let's not kid ourselves, or the media, I should say, in general. But I think, to your point, the sort of eternal optimism of it's still the greatest country on earth, and the fact that we have too many people feeling that's not the case, that's probably the commentary I'm most, I'd say, depressed by. But that's the thing that and you and I know, we share that. And for those who are interested, please Google David's writing, because I think he's got some really thoughtful pieces out there that he's written both during COVID and after. And I share some of the opinions, but you're just much more eloquent, better writer than I am. I wish I'd written them. Shifting back again,
you're a much better interviewer than I am, Chris.
As far as I know, we could literally spend an hour. I really do. I enjoy even talking to folks on the other side to get sort of a reasonable approach. The neat thing about you is you actually take a reasoned approach. But I want to shift back to business and personal. By the way, we were both accounting majors and doing things far from it, but I still think it's the language of business, which is kind of funny. But this kind of goes back to that. The 25 or 30-year-old David Eisner, what do you wish you knew then that you know now? And I know your life has been blessed, and you said 30 years of success. What kind of thing would you tell our younger listener? Frankly, I asked this question with a loaded, because my son's young and I want him to get advice from lots of smart people.
So when I speak to young people, even like college people, the biggest piece of advice I give them is to keep your eyes open to opportunity. I say this with all humility, that's because it doesn't really have to do with me. But if I'm telling a group of college kids that they're talking to me, they're already in a place of some opportunity. And in some ways, I say half of the country, unfortunately, they don't have opportunity. And then the other half that do most have opportunities pass them by. And to one, be in a place where you have access to opportunity, to two, be in a place where you recognize opportunity, and three, to actually take advantage of opportunity. That's when you talk about the 1%, unfortunately, even of the 50%, or whatever it is, who have opportunity, they're blind to it or they let it go by. So I didn't have that mentality when I was 25 or 35, but it's really probably the single most important lesson I try to give young people.
It's fantastic. And I think to your point, say yes when someone taps you on the shoulder, and better yet, offer up. How can I help? It's like,
Yeah, that's what I did. There was no plan to any of this. I grew up with, a very middle class family. My father was a bookkeeper and my mother was a school teacher in Pittsburgh. I didn't even dream of the opportunity and life that came my way. So,
and by the way, hence the belief in America, right? Because you're living the American dream, which is I've lived it and continue to live it, which says a lot. Now you did, this wasn't a scripted question because you worked in Pittsburgh and I know you're a diehard Steelers and Pens fan. Give me your number of Steelers wins this year. We'll go back and play it in a few months.
Well, I am an optimist. I'm going to say 10 wins.
All right. And I know my partner, Greg Michelson, will appreciate that vote of confidence. So
yeah, you can't tell from the preseason, but I have a lot of confidence in the leadership and the personnel there. So I'm still at 10 wins.
Love it. Last one to wrap up. Later stage growth CEOs. We've gotten from startup and now you're in scale up, whether it's by revenue proxy or by employee count. We're now past, there's something there and we're a $25, $50 million company. We're making some money, not a lot yet. What's the advice for them that you give a CEO like that? I know you're probably full of a lot more than just one tidbit of advice, but what's your advice for someone who's kind of gotten past the startup mode?
I would say make sure your team is up to the next part of the journey. It's a different journey. And just with CEOs, there's a lot of great heads of sales and finance guys and product guys that you couldn't have done it without, but who kind of plateau. So if I didn't develop them sufficiently, but that's the one thing I really want to look for is make sure you're always evaluating and not looking back, but looking forward with your team.
It is the tough part about being a CEO, right? And sometimes the board member can be the best help for that, of that objectivity. We have a little saying, and I'm sure someone else said it, but we still at Edison, what got you here probably isn't going to get you there. So you've got to constantly evaluate that. And the stronger the culture, the better those conversations tend to go. But look, that's great advice. You've given great advice to young people. You served our country, literally, and built a great outcome. And frankly, you've been a great mentor and help to me, multiple companies. So I really thank you not only for joining us today on Electrifying Growth, but for the last, I guess it's well over 10 years now. I mean, it's been pretty amazing too. You're really a gentleman. Anyone who gets a chance to work with you, I'm sure will feel that same way. So thanks for joining us today. Thanks for serving the country in the Treasury Department. And we'll keep our fingers crossed that the next couple of months be calm.
And by the way, Chris, I feel the same way about you. Thank you.
Thanks, David. Have a great day. Really appreciate it. Thank you for joining this episode of Electrifying Growth. A special thanks to this week's guest for sharing their time and insight. For more resources, inspiration, and a look inside the Edison Partners network, sign up for our newsletter at www.edisonpartners.com. Click on the Stay in the Know button in the top right corner of our webpage. Thank you again.